Good day, everyone, and welcome to EXFO's second quarter conference call for fiscal 2021. Today's call is being recorded. At this time, I would like to turn the conference over to Vance Oliver, Director of Investor Relations. Please go ahead, sir.
Good afternoon, and welcome to EXFO's second quarter conference call for fiscal 2021. With me on the line today are Philippe Morin, EXFO's Chief Executive Officer, and Pierre Plamondon, CFO and Vice President of Finance. Germain Lamonde, EXFO's Founder and Executive Chairman, will also be available to answer questions during the Q&A period. A reminder that this conference call will include certain forward-looking statements and or estimates concerning our intents, beliefs, or expectations regarding future events that may affect EXFO. Please note that such comments will be affected by risks and or uncertainties, including the impact of the coronavirus pandemic on our employees, customers, and global operations. This may cause the actual results of the company to be materially different from those expressed or implied today. For more information about EXFO, I encourage you to review our Form 20-F filed with the Securities and Exchange Commission. Our annual information form is available with Canadian Securities Commissions as well. Please note that non-IFRS numbers may be used during this conference call today. A reconciliation of these non-IFRS results with IFRS numbers is available in the Q2 2021 news release on our website. All dollar amounts in this conference call are expressed in U.S. dollars unless otherwise indicated. So without further delay, I will turn the call over to Philippe.
Thanks, Vance, and good afternoon. EXFO delivered another solid financial performance in our second quarter of 2021, highlighted by a robust bookings growth of 8.9%, for a book-to-bill ratio of 1.15, and strong cash flows from operations of $14.7 million. I'm particularly pleased with our strong bookings in the second quarter that reflect increased market demand driven by catch-up spending and early deployments of 5G cloud-based networks, as our customers, the communication service providers, get a better handle on transforming their networks during the coronavirus pandemic. Recent success in securing multi-year contracts bodes well for the expanding footprint of our Nova Adaptive Service Assurance platform. There's a growing number of RFPs for 5G standalone network monitoring systems are expected in 2021 and beyond. So overall, our sales increased 25.2% year over year to $16.3 million in our second quarter of 2021. But it should be recalled that the initial outbreak of the pandemic had forced a 1-month shutdown of our manufacturing facility in China a year ago in February 2020. Turning to the bottom line, IFRS net loss totaled $2.4 million, while adjusted EBITDA amounted to $3.4 million, or 4.9% of sales. At the halfway mark of our fiscal year 2021, EXFO generated IFRS net earnings of $1.1 million, or 2 cents per share, and an adjusted EBITDA of $13.4 million, or 9.5% of our sales. So as we turn into our looking at our product line, in terms of our test and measurement product line first, revenues grew by 36.8% year over year, again reflecting the 1-month shutdown of our manufacturing facility in China in Q2 2020 that does distort year over year comparisons. The T&M bookings grew by 3.2% year over year, mainly due to increased fiber deployments by communication service providers to support broadband network expansion. EXFO has also benefited from earlier budget releases by some service providers in calendar 2021, which has positively affected our T&M booking. This heightened demand, mainly driven by catch-up spending from delayed projects, was partially offset by reduced investments by the network equipment manufacturers for our lab solutions in Asia-Pac region. It should be noted that the initial coronavirus outbreak in February 2020 had little impact on our test and measurement bookings in our Q2 2020. So the T&M orders began to significantly drop in our third quarter of 2020 as preventive lockdown measures were imposed in several countries. So as such, we can state that our T&M bookings are gradually returning to a pre-pandemic level with good growth opportunities in the second half of our fiscal 2021, given anticipated investments in fiber deployment, 5G infrastructure, and data center connectivity. Now turning to service assurance systems and services business. On the SaaS side, our revenues decreased 2.1% year over year, while bookings improved 20.6% to $25.3 million in the second quarter of 2021. The strong bookings growth can be attributed to recent wins for our Nova fiber monitoring solution, to increased traction of our Nova Sense AI troubleshooting solution, and as well from a solid support contract renewals. Now, if you recall, we announced a major fiber monitoring deal with Openreach, a subsidiary of British Telecom, in early January. The good news is that Openreach recently confirmed that it will move ahead with its plan to pass 20 million homes, 20 million premises with fiber by mid-2025. As a result, EXFO will benefit from this multi-million dual-source fiber monitoring deal with Openreach. Order momentum in the second quarter of 2021 also intensified for our Nova Sense AI, or our automated troubleshooting solution that detects network anomalies in real time. Nova Sense AI is attracting customers' interest because this solution shuns big data swamps in favor of highly specific information and prioritize insights to reveal network outages and service degradation. Ultimately, Nova Sense AI, with its built-in machine learning capabilities, combined with other solutions like Nova Active, helps service providers improve subscriber experience and faster troubleshooting times, as highlighted by the 2.5 million bookings this quarter with a European service provider. Finally, EXFO's Nova Adaptive Service Assurance Platform has been selected after an RFP process to enter the lab evaluation stage for a potential large-scale 5G monitoring deal. At this point, we have secured a $2 million order to undergo the lab evaluation, and we're doing this in a partnership with a Tier 1 network system vendor for a prospective 5G standalone cloud-based network deployment in the United States. So now I will turn the call over to Pierre to cover our financials. Pierre?
Thank you, Philippe. Good afternoon, everybody. Sales increased 25.2% to $69.3 million in the second quarter of 2021 from $55.3 million in the second quarter of 2020. As previously mentioned, sales increased year over year, mainly due to the initial impact of the COVID-19 outbreak that forced a 1-month shutdown of EXFO manufacturing facility in Shenzhen, China in February 2020. Bookings, meanwhile, improved 8.9% year over year to $79.3 million in the second quarter of 2021 for a book-to-bill ratio of 1.15. Gross margin before depreciation and amortization reached 56.1% of sales in the second quarter of 2021 compared to 57% in the second quarter of 2020. Our gross margin in the second quarter of 2021 was affected by a less favorable sales mix compared to the same period last year, as we recognize into revenue less software-rich solutions in Q2 21. In terms of operating expenses, selling and administrative expenses decreased to $22.9 million, or 33.1% of sales in the second quarter of 2021, from $24.3 million, or 44% of sales in the second quarter of 2020. The $1.4 million decrease in SG&A expenses reflects lower travel and trade show expenses due to the pandemic and the full impact of our 2020 restructuring plan. Net R&D expenses increased to $13.5 million, or 19.6% of sales in the second quarter of 2021, from $12.6 million, or 22.7% of sales in the same period last year. The $1 million increase in net R&D expenses mainly related to some hirings and annual salary raises and the mix of R&D projects. IFRS net loss totaled $2.4 million or minus 4 cents per share in the second quarter of 2021 compared to a loss of $9 million or minus 16 cents per share in the COVID-impacted second quarter of 2020. IFRS net loss in the second quarter of 2021 included $2 million in amortization of intangible assets, $1 million in stock-based compensation costs, $0.1 million in foreign exchange loss, and an income tax effect on these items of $0.3 million. Net loss also included $0.3 million for an after-tax wage subsidy granted by the Canadian government to help companies mitigate the effect of the pandemic, as well as $0.7 million for the negative goodwill recorded following the acquisition of InOpticals. Adjusted EBITDA amounted to $3.4 million or 4.9% of sales in the second quarter of 2021 compared to minus $4.9 million or minus 8.9% of sales in the COVID-impacted second quarter of 2020. Geographically, the Americas accounted for 48% of total sales in Q2 21. Europe, Middle East, Africa represented 38%, while Asia Pacific totaled 14%. In terms of customer mix, our top customer accounted for 6.8% of total sales in Q2 21, while our top three represented 14.3%. Turning to a few key points on the balance sheet, our cash position increased by $7.8 million to $24.3 million at the end of the second quarter of 2021. This increase is mainly due to $14.7 million in cash flow from operation and $0.8 million in cash acquired from the InOptical transaction. These items were partially offset by $5.4 million for the reduction in our bank loans, $1.4 million for the repayment of lease liabilities and long-term debts, and $1.2 million for the purchase of capital assets. At the end of Q2 21, EXFO had a net cash position of $10.2 million and available revolving credit facilities up to $68.3 million until May 21 and to $52.5 million thereafter. At this point, I will turn the call over to the operator for the start of the Q&A.
Thank you. If you'd like to ask a question, please press star followed by the number 1 on your telephone keypad. If you're calling from a speakerphone, please make sure your mute function is off to ensure your signal can reach our equipment. Again, star 1 to ask a question. And first we'll go to Thanos Moschopoulos from BMO. Your line is open.
Hi, good afternoon. I guess to start with, on the Tier 1 5G trial, I guess first of all, congratulations on making it to the lab evaluation phase. And secondly, any sense you can provide us in terms of the timing for that customer to make a decision?
Yeah, so thanks, Thanos. So the lab evaluation is a pretty complex and lengthy process. So we do expect that the next phase should happen in our before the end of our fiscal year. So, but again, it's we'll see how lengthy it gets. But we're hoping that by the time we get into the summer, we'll get to the next phase.
And you mentioned OpenReach dual sourced, and I realize that's not a 5G deployment, but as far as the 5G operators you're talking to, are some of those looking to dual source, or are those primarily single source situations?
Yeah, it really depends on our type of our business here. When you look at fiber monitoring, it does involve, because it's got a portion of hardware and software in the solution, you can ultimately, especially the size of millions of homes that OpenReach is looking at, it does allow them to go and do a dual source supply strategy. But as you move into more of the 5G standalone cloud native kind of solution, where you cover the whole core network, end-to-end services, and you look at the upgrade from going to 4G to 5G, in a lot of these cases, it tends to be more single source because it's easier to imagine providing that end-to-end visibility and helping you troubleshoot when you have that single source model.
And I don't know if you can provide any color on size, but just hypothetically, might this 5G deal be kind of similar in size to, say, the OpenReach deal? Is that the right way to think about it, or I don't know if you can provide any comment on that?
Yeah, I think, when you look at what I just kind of presented in my remarks, we've got we got the OpenReach win, which is with fiber monitoring. We've got the SenseAI with the European customer, and now this one. They tend to really be multi-year, multi-million of dollars. But on this one in particular, it's still too early to tell. There's still a lot of variables and a lot of work to be done. But they tend to be following the same kind of pattern that we've presented in the past. So they tend to be contracts between 3 to 5 years. They tend to have multi-million aspect of it. And obviously, depending on the size of the customer, the number of subscribers, especially now if you're starting thinking about 5G and IoT, the type of coverage you need, and that will kind of dictate the opportunity. And it's going to be, and on top of that, as you know, Thomas, we always get maintenance contract renewal. So, we'll be able to get a better view as we continue to involve and work this lab evaluation that we've embarked to in this quarter.
Okay, great. And I guess we'll be focusing on maybe just the shorter term dynamics of the business. Has visibility improved relative to the last 3 months, would you say? Or are things starting to look a bit more predictable in terms of customer behavior shorter term, or how would you characterize that?
Yeah, I think that, for me, when we thought we were going to start getting better visibility, and as I mentioned in my remarks, we're now starting to see T&M being back to the levels before pre-pandemic. Now we're seeing the third wave coming in and, really getting us to the point where we need to really be careful about what will be the impact of that. There's also the aspect of supply. I think everybody is reading about the whole supply chain. That's something that we're very, very closely watching. We've got long-term relationship with our suppliers, but when you see the demand that's taking place and then some of the constraints that we're seeing on the supply chain in other sectors, that's another aspect that we want to be really closely watching as we go through that. So, I'll give you an example. Even in Q2, we ended up getting bookings a bit stronger than we anticipated on the T&M side. So, part of the pent-up demand and the need to recover on the last few months of last year had a positive impact on our bookings. And so that whole aspect makes it a bit more predictable for us to look at our plan for the next 6 months.
Okay, that's great. Thanks, Philippe. I'll pass the line.
And next we'll go to Robert Young from Canaccord Genuity. Your line is open.
Hi, good evening. Maybe I'll just ask about the supply chain that you just brought up there. I assume that's chip shortages that we're hearing about. How will that manifest in your results if they get worse from here? Is this going to be a headwind to your gross margins? Will it limit your ability to generate revenue? Where should we think about that as being an impact?
Yeah, no, it's a good question, Robert. So obviously on the SaaS side, we're being predominantly a software business. There's no real impact there. More on the T&M side, and I think for us it would be more around probably seeing more longer lead times on components, which could ultimately have an impact in terms of shipping equipment. At this point, we don't see any issue, but we want to just make sure that we're obviously spending much more time with our suppliers to make sure that we're not being impacted as we're seeing in other industries But so far, we've been able to manage around what we're seeing right now.
Okay. And then the T&M strength. I mean, last couple of quarters or last quarter, I believe you said that some of the maintenance and operational sort of spend was pushing out some longer term projects. Is that still what's driving T&M here? I think you talked about some fiber deployment, or are you seeing this more transform into longer term projects? I understand some of the 5G upside is still farther out, but are you seeing that improve towards longer term projects?
Yeah, no, I think for this quarter, particularly on the T&M strength, we did see some pent-up demand. Because if you recall our previous results, we've seen really when the pandemic hit, the T&M, especially what we call the physical business of the OTDRs, the type of instruments that field technicians use, got impacted by the pandemic and the lockdown and so on. And what we're now seeing gradually is that business is coming on, and it came on really strong in our Q2. So the question is that going to continue, or is it really a pent-up demand? So we're really seeing that catching up of where I think people felt behind because of the pandemic, and as the service providers adapted to this new environment, they've been able to now to make decisions on procurement of our test and measurement solution. So that's where we've seen the impact on our strength of the T&M, and that's why we've seen almost $54 million of bookings. And then SaaS had strong performance. On the SaaS side, as I mentioned, we're seeing some really nice traction on our fiber monitoring, some nice traction on SenseAI, and Q2 by a seasonality aspect also represents a quarter where we do a lot of maintenance contract renewals, which we did a good job of securing that in our quarter.
Okay, that's great color. Maybe two more questions, if I could. Just you talked about strong RFP trends. You said the RFP trends were strong last quarter as well. Has it gotten better or worse? Are you more confident this quarter than last quarter? Maybe if you could give us a quarter-over-quarter view on the RFP trends, that would be helpful.
Yeah, the activity on 5G standalone are continuing to be strong. We're very busy at responding to RFPs, and you see the result on one of them that along with a partner, we're going into a deployment, into a lab for a potential deployment in Americas. So we're starting to see that. It's still mainly driven out of where we see most of the activities are in Americas, but we're now starting to see Europe starting to come pretty active as well on 5G, and as well from 4 to 5G on transition there. So I do think that in terms of revenue impact, this is going to be, again, as I mentioned, more into 2022. But the activities, as an example, we're very happy to see that for lab evaluation, we're getting our customers to pay for those. And ultimately, I think it bodes well with the traction we're seeing, with the wins we're seeing, that I think we can really continue to expand our footprint. As I mentioned in the last quarter, for SaaS, it's all about a footprint game. You got to win those contracts initially. They tend to bring professional services at the beginning so that you can do the integration. But once you're in the network, they're multi-year contracts, and it allows you to expand, allows you to bring other tests and other monitoring capability. With 5G standalone, as you know, we're going to go into network slicing, which will again allow us to go and upgrade what we're doing. So really important for us to continue to get the wins and secure these contracts that we've highlighted so far, and continue to get into these lab evaluations as the RFPs goes to the next stage.
Right, and you've brought it up a couple times already, but the standalone 5G deployment. I mean, when I think of that as something that's the next stage, as opposed to something that's really driving anything right now. Are there actually any deployments around standalone that you're seeing now, or is that something that's a 2022, 2023 opportunity? Are there any closer term 5G opportunities that you see?
Yeah, no, I think we'll see the volume will really kick in 2022, Rob, as you mentioned, but we are starting to see some customers taking the lead on deploying 5G standalone, starting with their core network. They've all made all their decisions between Nokia, Ericsson, Samsung, Huawei. Now they're going to the next phase. In order to implement that 5G standalone core, they need our solution to do the monitoring, troubleshooting, and service assurance. And that's what we're seeing with the RFPs that are happening now. But in terms of deployment, some deployments in 2021, but really the impact will be more felt in 2022. But we're very happy right now with the progress we're making with the footprint that we're getting with our solutions. So we just got to continue to do the work. These lab evaluations are long, they're complex, but I do think that the rewards are there and once you get selected.
Okay, great. Thanks for taking all my questions.
Thank you, Robert.
And next we'll go to Tim Savageau from Northland. Your line is open.
Hi, good afternoon. Wanted to follow up on a couple of things. First, your commentary about seeing some early budget releases from some of your carrier customers. Looking for a little more color there. I assume that's probably focused on the U.S., your top customers, but if you have any other commentary geographically, I'd be interested in hearing that. And to what degree you've sort of seen that momentum continue into the current quarter, fiscal Q3, and then I have a follow-up.
Okay. Thanks, Tim. So what has been interesting for us, again, in the context of the T&M strengths on the bookings, has been that both in America and the EMEA, and I would probably say U.S. and the EMEA, what we've seen, Tim, this year is as soon as the budget got approved, which tends to be in the beginning of calendar year, usually what we've seen in the past, it takes a bit more time to get the purchase orders to go out and the procurement process to go through. I think because of the pent-up demand of the previous year, what we have actually seen this quarter is as soon as the budget got approved, we saw an acceleration in converting those into purchase orders. And as I said, predominantly in the U.S., predominantly in the EMEA, across our customer base.
Great. Sorry, I was on mute there. And then, looking a bit farther out, when you see news such as what we saw out of Verizon and AT&T, kind of accelerating 5G deployments and likely associated fiber deployment, and as well as AT&T increasing its target for fiber homes passed this year. When would you expect to see the impact of any of that type of activity? It seems more kind of oriented toward the back half of calendar 21 or 22. And would you view that as potential separate catalysts from some of the more kind of catch-up oriented demand you're seeing currently?
Yeah, no, I think so. The announcements by Verizon, AT&T, and T-Mobile, just on the heel of the spectrum auctions, Tim, if you recall, where frankly I was a bit nervous with $80 billion going into spectrum. Will the service providers have to step back on their investment? And I was really happy to see that not only that, but both Verizon and AT&T have actually decided to increase their CapEx spending. Now, a lot of it will probably go into the 5G deployment, new 5G radio, but we do think that it will potentially continue to really help our fiber business on the T&M side, and then as well, obviously, as these go more aggressively on the 5G core deployment, we are obviously looking at being at playing in those accounts with our assurance business, with our Nova Adaptive platform. So, for us, the question is going to be the timing of the investment, and then how quickly will they start really ramping up. I do think, Verizon, AT&T have been pretty aggressive already on fiber to the homes path, and we've seen some of it, I'm pretty sure, come into our quarter in terms of their investment requirement. And part of my comment around investing very quickly as they got the budget approved. And then we'll have to see what happens as well now in Europe. I mean, we're starting to see fiber to the home being prioritized. You see the monitoring results, fiber monitoring results that we're getting is obviously on the heel of BT Openreach, but we've also got nice traction with that solution as they're looking at being a bit more aggressive now on deploying fiber to the home, fiber to the antenna in Europe, which I think they were a bit behind in some countries there.
Great, thanks. And last question from me, and this references the APAC weakness that you saw both sequentially and year on year in the quarter. I think you pointed to some OEM weakness in lab and production. Should we associate that with China OEMs or maybe big China OEMs, or are there some other dynamics there? And is that a kind of situation you expect to continue?
See, what was interesting with our network, our manufacturing product, what we've seen, Tim, is actually good, very strong traction in both North America and even in Europe, which we hadn't seen that much in the past. So both of those regions did really well. But what happened is predominantly in China, where we had a really, really strong quarter in Q2 last year, right during the whole beginning of the pandemic, but with really strong performance there in China that did not repeat this quarter. And so although we recovered a lot with Europe and Americas, not as much. We were not able to recover as much of what the decline we've seen in China.
Okay, thanks very much. I'll pass it on.
All right, thank you, Tim.
And next we'll go to Richard C. from National Bank Financial. Your line is open.
Yes, thank you. With respect to the 5G, based on sort of your bookings to date, when would you guys expect to sort of kind of reach this sort of peak level of 5G? Is that in the next 2-3 years? Just want to get a sense of that.
Yeah. So Richard, the question is you got to separate between the T&M business and our service assurance business. I think on the T&M side, we're seeing we do believe we're going to see the fiber build out, fiber to the antenna, the front haul, the back haul, that's going to be all fiberized. That's going to be for many years because of the fact that, they're just going to have to increase the overall front haul and back haul capacity that 5G brings. And so that's going to be there for, I think we've got a good cycle there. And I keep using the expression that we're in the first few innings of a baseball game here on the T&M side for 5G. Especially when you put that context into a global view. And then the whole discussion around the service assurance, I do think that what we're going to see is the next, 2021, 2022 is when you're going to start seeing these contracts being awarded and you start getting into the deployment. But again, we're even on the first inning there, right? So there's still a lot to go and lots of pitches to take place. And it's a 10-year cycle at least. When you look at how long it took to get the 4G deployed, 5G is going to be obviously more important. It's more of a major, in my mind, revolution in terms of the network deployment. It allows to go with IoT, combine new technology like artificial intelligence, start getting into private 5G networks being built out. So we're in for many years. I would say at least 10 years of deployment for that 5G, and we're just at the beginning. And then it will depend by geography. I know I keep repeating we're seeing the U.S., Japan, Korea, China taking the lead, but then we're going to also see, depending on the different economies and countries, the deployment taking place as well.
Okay. And then, you guys have obviously benefited on the OPEX side As we kind of look to the other side, with hopes that everything finally opens up at one point, would you say that sort of on the expense side, you'd kind of get back to your pre-COVID run rates, or have you kind of, identified areas of savings that are going to be more permanent here going forward, or just trying to reflect that in a model going out here the next year?
Well, I guess on the, we've been very, very prudent and diligent on our spend, obviously during this period, both on R&D and SG&A. SG&A was obviously reduced because no more traveling, no more conferences and so on. I do think that we will need to go back to traveling again and meeting customers face to face. And so you would expect the SG&A to, once we get behind, this third wave and the vaccinations taking place, that you're going to start seeing maybe an increase in SG&A that has to do with travel and so on. But I do think that there is a bit of a shift here in terms of how we're actually going to continue to engage our customers. I do think that the virtual model, virtual demos, these big conferences that used to take place, it'll be really interesting to see. I'm not sure we're going to go back to these kind of models, but we'll have to see. This apologize, there's a bit of noise on the bridge here. But for me, that's where I would say we get a bit more on the spend. We'll ultimately be back into the travel, but I don't believe it's going to be as much as where we used to be pre-COVID.
Okay, and I guess related to that, with the sort of cash flow in a quarter, and you've got a pretty decent credit facility there. What are you thinking about sort of capital allocation? Acquisitions have been, I would say, a contributor here in recent years. What's that environment look like today, and what are you sort of thinking on that front?
Kelly, you want to take that one? Kelly, are you there?
Yeah, for sure. We'll continue to look to any acquisition. Jeremy is on the call as well to comment on acquisition. We did close in optical in last December. We still have enough cash if we want to pursue any other kind of acquisition to complete our product line or even extend some reach. So for me, the capital structure is still acceptable to continue to grow through acquisition.
Okay. Would you guys ever consider starting to buy back stock, given the stock price here today?
This is always an option. We still have our share buyback program in place that we can use if we believe this is the right thing to do to use our cash.
Okay, great. Thank you.
And next we'll go to Daniel Chan from TD Securities. Your line is open.
Oh, hi. Thanks for taking my question. I just got one. You mentioned with the SaaS RFP you're working with a large tier 1 network vendor to help you work on that. Just wondering about your go-to-market with respect to some of these larger 5G deployments, whether you plan on partnering with more network vendors or whether you continue with your current mix of direct and partnerships. Thanks.
Yeah, no, I think the strategy for us will be, without divulging too much from a point of view of go-to-market, is that we'll do both. I think there's really opportunities for us to go direct in certain accounts, but there are other accounts that we really feel that going through a strong partner, will actually help us get and be a successful deployment. So, I think you're going to see us do both a direct and through a partner, depending on the customer type.
And at this time, I'll turn it back to Philip Murray for closing remarks.
All right. Well, thank you very much. So just a few key takeaways before we conclude this call today. First, EXFO delivered another solid performance in our second quarter, and based on robust bookings growth of 8.9%, a book-to-bill of 1.14, and $79 million of bookings, and as well our cash flow from operations at 14.7 million. Second, our order momentum for our SaaS business is accelerating and continues, and it has accelerated in the second quarter. With bookings increasing more than 20% year over year to 25 million. And then finally, EXFO's Nova Adaptive Service Assurance Platform continues to gain market traction, as we've been highlighted with recent contract wins and this lab evaluation for this 5G standalone cloud-based monitoring contract in partnership with the Tier 1 network system vendor. So this concludes our Q2 2021 conference call. And on behalf of the entire EXFO team, I want to thank you very much for joining us today. Thank you.
And that does conclude our call for today. Thank you for your participation. You may now disconnect.